The top business stories live from the Sky News City studio. The UK's biggest company, AstraZeneca, more than doubles its annual profits. What next for the green economy as Labour ditches its £28 billion green investment pledge? And as international travel continues its recovery, earnings are up at Travelex. I'll be speaking with the chief executive. Good morning, this is Business Live with me, Ian King. It's a very busy day here in the city with a possible bid for a FTSE 100 company and some of the UK's biggest businesses reporting results. We'll have full details of those in just a minute. But first, what price the green economy, with Labour set to confirm it's ditching its £28 billion green investment pledge. Well, joining me now is James Alexander. He's Chief Executive of the UK Sustainable Finance and Investment Association, which represents the sustainable finance and investment community and whose members include Schroders, Aviva Investors and Scottish Widows. James, welcome to Guns less than a month ago. You must be pretty disappointed.
Yeah, I mean, I think what businesses want to know and what businesses want to understand, and including many of the investors that you've mentioned that are members of UK SIF, they have billions of pounds to invest in economy around the world. They're looking to find investments that are low carbon, that are driving us forward in a sustainable future. And they want to understand that a future UK government would be committed to making that the transition, to taking the UK economy forward in a sustainable way. And this is quite a blow. The investors are disappointed by this, but it's not a done deal. There are many other ways that the UK can drive forward its leadership on sustainable finance, and in doing so, attract new jobs, create new industries here in the UK. And so we urge any future government to look at ways to attract the private capital and find ways to address the lack of private capital flowing into the UK, because we are losing the race at the moment to the US and to the EU, who are doing a much better job of attracting that private capital than we are.
Well, you've kind of preempted my next question, which is going to be, can a lot of the things that Labour envisaged doing actually be done by the private sector instead?
Well, yes, we strongly believe that the key prize here is not how much public investment is being made, but actually what government does to work with the private investors who have got many, many multiples of 28 billion and that we're going to need to drive into the economy and find ways to attract that investment. And so there are key bottlenecks in the UK economy. We're looking at challenges around planning and the planning rules and the planning system, challenges around grid connections. You know, we've got members that have got investments they want to make right now, but have been told their grid connection will be 10, 15 years' time. Now, that's not, therefore, an investment that can be made. So if we can address some of these grid connection issues, if we can fix some of the planning challenges, then we can go a huge, long way to making that private investment possible. But what it also requires is consistency of government policy. We must make sure that the policy that's laid down is the policy that business can trust and rely on to make those long-term investments into the UK economy, which will create new jobs here and drive our future prosperity in a sustainable way.
I mean, James, more broadly, do you detect a bit of hesitation on the part of some in the private sector just now? I mean, I'm thinking, for example, yesterday, Ørsted, the world's biggest offshore wind farm developer, announced it was pulling out of several markets and it's cutting back on its capital expenditure plans.
I think the challenge is that the future of the world's movement towards a sustainability, our plans for a sustainable future are not immediately clear, and that the challenges that this requires governments across the world to act both individually and collectively to set out the pathway, to determine where investments are needed, to create the opportunity for that private investment to come through. And I think the UK has an amazing opportunity here to find the ways that the private sector can engage, create the conditions for that growth, and then build this green economy that we need to see. You know, we're on the day that it was announced that the world has warmed past 1.5 degrees for a full year for the first time. The urgency of addressing the climate crisis has never been greater. Private sector is there with capital really willing to invest. We've got to now figure out how to create the conditions for that investment to flow.
OK, James, got to leave it there. Appreciate you joining me today. Thank you.
Thank you very much.
Some other business news stories for you now. And breaking news. In the last hour, the paper and packaging group DS Smith has revealed it has received a highly preliminary expression of interest from its rival Mondi. DS Smith, which is Europe's largest cardboard and paper recycler and which employs 30,000 people worldwide, said it understands that Mondi was considering a possible offer for it, but added that no proposal had been received at this stage. Combining the two companies, both members of the FTSE 100, would create a business worth £10 billion. DS Smith shares are up 11% on this news, which comes after a third FTSE packaging firm, Smurfit Kappa, announced recently it was buying its US rival Westrock for $11 billion. Continued strong demand for its blockbuster cancer treatments and a big drop in its costs has helped the drug maker AstraZeneca to more than double its annual profits. The UK's biggest company by stock market value, which this year celebrates its 25th anniversary, reported a full-year pre-tax profit of $6.9 billion. That compared with $2.5 billion in 2022. Well, the fastest growing product in terms of sales was Imfinzi, AZ's bladder cancer treatment, which enjoyed a 52% rise in annual sales. Calquence, a blood cancer treatment, saw its sales rise by 22%. But AZ's biggest selling product during the year was its diabetes treatment, Foxiga, whose sales during the year hit nearly $6 billion. Shares of Unilever have risen by more than 3% this morning after the food, personal care and household products giant reported a rise in sales volumes for the final 3 months of last year. It was the first time in 10 quarters that the UK's fourth largest company has reported a rise in volumes. But sales for the year were flat, and Unilever, whose brands include Coleman's Mustard, Magnum Ice Cream, Lifebuoy Soap and Persil Washing Powder, saw full-year pre-tax profits fall by nearly 10% to €9.3 billion. Heinz Schumacher, the new chief executive, told our sister channel, CNBC, that the company's overall performance needs to improve.
We're seeing easing inflation around the world, and in some areas that's more than in others. And I have to say, in the non-food part of our portfolio, there is, inflation is coming down faster. In some areas, we actually have deflation. When that happens, we are, of course, adapting our prices to a new reality. There's new competitors usually coming in. We see a bit more promo activity. And, of course, we're adjusting. We want to make sure that we keep our market positions and we remain competitive. Well, we're trading at a discount. That's fair. And look, my role is and my job is, of course, to take that discount out. And I think we have a lot of reasons to do that. I mean, first of all, it comes down to consistent performance. Be very clear in our choices, so explain what we're doing very clearly to our investors, and seek sequential improvement, as I said, in our top line, a healthy top line that consists of mix, volume and price, an enhanced gross margin, and translating ultimately in a good profit situation. That's what I need to do. That's what the plan is all about. So I'm very optimistic about the future, but of course it takes a bit of time to turn a big ship like Unilever.
British American Tobacco has gone into the red after taking a big write-down on the value of its US business. The company, whose brands include Dunhill, Rothmans and Camel, wrote down the value of its US operations by £27.3 billion. That led to a full-year pre-tax loss of £17.1 billion compared with a profit in 2022 of £9.3 billion. But BAT, the UK's 10th largest company, said its new categories division, which includes the world's biggest vaping brand Vuse and the heated tobacco product Glow, have made a profit for the first time 2 years ahead of target. The shares are currently ahead by some 7% as BAT also said it will sell some of its stake in the Indian tobacco firm ITC. Shares of Arm Holdings surged by as much as 42% in after-hours trading overnight after the British chip designer reported better-than-expected quarterly results and forecasting busting results, and it gave a strong profit forecast for the current quarter. The Cambridge-based company, which floated on Nasdaq in September last year, reported sales of $824 million for the 3 months to the end of December. That was up 14% on the same period a year earlier and way ahead of the $761 million Wall Street had been expecting. Well, Arm, whose chip design technology is in nearly every smartphone worldwide, said it also expects sales of up to $900 million for the first 3 months of this year as more companies license its designs to run artificial intelligence. Well, staying with AI now, and on this programme in the recent past, we've covered how AI is making sectors like legal services more efficient. But another sector where the technology is expected to be harnessed productively is audit. Amsterdam-based Data Snipper is an intelligent automation platform for audit and finance professionals, with clients including all of the big four audit firms, EY, PwC, Deloitte and KPMG. It's just raised $100 million from investors, including Index Ventures, at a value of $1 billion. That makes it the first Dutch company to achieve unicorn status in 2 years. Well, here with me now is the Chief Executive of Data Snipper, Vidya Peters. Vidya, nice to see you this morning. For the uninitiated, what does Data Snipper do?
Ian, it's a pleasure to be here with you today. Thank you for having me. I'm excited to chat with you about Data Snipper because it's earnings seasons now. And you and I take for granted how important trust is when we look at numbers. And that's where Data Snipper comes in. If you think about all of the earnings you reviewed this morning and every public company behind it, there are armies of auditors checking and verifying that financial data so that you and I can make the best stock investments possible. And yet, this is a very underserved population. Auditors are leaving the industry in droves because they are under a mammoth of regulations, new rules, new requirements. There are fewer people joining the industry, and there's more manual work for them than there are hours in the day. And what Data Snipper does is uses AI technology to eliminate as much of that manual work, this whole job of matching, cross-referencing data, so that auditors can focus on what they do best, which is looking for risk in the business and advising their customers on how to mitigate that risk.
So you remove, for example, a lot of the work that's required about verification of data then, do you?
It's a lot of the manual work associated with looking through reams of paperwork and matching transactions.
Reconciliation.
The reconciliation, the matching, the verification. Is it what you said it would be in terms of the bank statement, the invoice, the payment that went through? That's the work that we look to automate because no auditor joined this profession to be matching data between paper sources. They came to be strategic advisors to the business, and that's what our software frees them up again to do.
So you've just raised $100 million. How are you going to put that money to work?
It's focused on innovation. Ian, we want to build the best products possible for auditors. This is an industry that's under siege, and I think there are such few products and solutions that make their jobs easier, and we want to solve as many problems for them as possible. So the number one agenda item is product innovation so that auditors can get back to doing what they do best, which is advising their customers.
And how do you charge clients? Is it a subscription model?
We are a subscription model and we charge them on a per user basis. We're really focused on ensuring our auditors can use the software as much as they would like and not worry about the charges related to it. And we want to make sure that our auditors are using Data Snipper on as many engagements as possible. So it's a simple per user basis that we charge them on.
Worth pointing out, you don't just have audit clients.
That's correct. We also are proud to serve Siemens, Hilton, Frontier Airlines. And what we realize is that the job of audit is pervasive. It's across industries. Every finance team and every Fortune 500 company is also checking data. And those are the customers we aspire to serve. An internal audit, financial control. Every government organization has an audit organization. So audit is more of a verb than it is a vertical.
I'm probably asking you a how long is a piece of string here question, but I mean, how big is the addressable market, do you think?
We believe it's a multi-billion-dollar opportunity, primarily because you don't have to have the title of auditor to do the job, the very important job of checking data. And so we have customers in oil and gas and insurance and healthcare for that precise reason. It is a universal problem that we're looking to solve.
And who do you regard as your main competitors?
Our main competitor today is manual work. Our main competitor are the evenings and the weekends our customers spend in the office, ticking and tying financial statements, looking through onerous pages of paperwork, so that they could actually get back to being with their families.
All right, Vidya, got to leave it there. Appreciate you joining me today.
Thanks so much, Ian. It's a pleasure.
Well, last night's solid finish on Wall Street, during which the S&P 500 hit a new record high and finished just shy of the 5,000 milestone, was followed by a largely positive session overnight for stocks in the Asia-Pacific region. The Nikkei in Tokyo hit a fresh 34-year high as the Bank of Japan ruled out a rapid rise in interest rates, while Shanghai stocks shrugged off news that China is experiencing its worst deflation since 2009. That's, of course, ahead of the long Lunar New Year break. Well, in Europe, stocks have been trading largely to the upside this morning on the back of some strong company results, although one of the main talking points is a fall of the Danish shipping giant Maersk is off 13% in Copenhagen. That's after it issued a profits warning related to Red Sea disruption. Well, here in London, the FTSE 100 is off just over 0.1% on a very, very busy day indeed for company results. BAT, which I mentioned earlier, that's added 15 points to the index on its own, and Unilever a further 11, both big heavyweights, of course, while the caterer Compass is ahead by just under 3%. It's got a trading update today that's also been well received. The leading blue chip gainer in percentage terms, though, and mentioned them at the top of the programme, DS Smith, now up some 12% on the back of that bid approach from Mondi off nearly 2.5%. On the FX markets, not too much volatility today to mention. Sterling off at 1/8% or so against the dollar, more or less unchanged against the euro. Likewise, the single currency unmoved against the greenback. As for the oil price, well, that is grinding higher on the higher-than-expected drawdown in US crude inventories earlier this week. A barrel of Brent crude will currently set you back $79.90 a barrel, and that is up 0.9% on the session. Well, joining me this morning is the Chief Investment Officer at Charles Stanley, Patrick Farrell. Patrick, good to see you this morning. How on earth do you cope, Patrick, on a day like today with so many big company results to wade through?
There is definitely a lot to go through. And it's not just in the UK, it's also across the US as well and Europe. So there is a lot of information that we've got to go through.
Which have been the highlights for you so far? I mean, Unilever and BAT have both had the strongest market reaction, I guess.
I think Unilever has been a good result simply because we have been looking for at least a volume recovery, and now we're starting to see that. Now they've got to get their act together in terms of where prices go and how they can sort of maintain and actually achieve some of their market share targets that they're looking to sort of achieve. But I do think that, that there is some hope from a UK and a global sort of recovery that's starting to come through in some of these numbers.
Now, what about AstraZeneca? I mean, I thought the results were spectacular, and yet the share price is off a percentage point or so.
Well, you can't please too many people. And even though the results were really, really good, I think the market and the street were looking for probably a better performance from some of their new drugs. And I do think that some of the old drugs actually did really, really well, and that sort of helped boost numbers. But I think the market was really looking for some of those newer drug issues to really sort of push a little bit higher than what they have. So what that tells me is that there could be some more upside coming through if some of those new drug sales start to actually really perform over the next year.
Very interesting point you make there. Now, what about the US overnight? I mean, the S&P's knocking on the door of 5,000. Corporate earnings largely have been pretty good this season.
Been. And we're not necessarily talking about the Magnificent Seven too much anymore, but I'd say that certainly any AI-related company is going to do well. And you mentioned the ARM sort of earnings coming through. They're going to contribute to the NASDAQ performance. But, some of the broader stocks are actually starting to sort of provide some performance as well. So there's a few more options for a lot of investors over the course of 2024. And as interest rates do start to ease off, and what we're seeing in the US in particular is the fact that because market rates have come off so substantially, that, it's already providing a lot of impetus to actually economic growth. So from that perspective, the consumer actually looks in a pretty good position, and that's going to drive the economy, and it's also going to drive the market as well.
Absolutely. Now, I mentioned the China inflation data, or deflation data, as we should properly call it. How worried should we be about that?
Look, I'm going to say that we shouldn't be too worried about it, simply because a lot of the driving force for deflation in China has been food. So food prices are actually down almost 6% over the course of the year. But if I look at the other sort of sectors, and if I look at the core rate of inflation, it's actually running at about 0.4% year on year. And services is running at around 0.5%. So even though China is in a sort of deflationary type spiral, I think the food issue is probably one which has a much higher weighting in the CPI for China than it does in any other sort of developed nation. So it is something that I'm not necessarily too worried about. I don't think they're going to go into any sort of deflationary spiral as a result of this. And to be honest, I think what the government need to do is actually just improve confidence across the country. They need to actually get more consumer spending activity happening. And in order for them to do that, they're going to need to take, at some stage, some more broad-based stimulus measures. And I think we just have to wait and see for when that happens.
OK, Patrick, got to leave it there. Always good to catch up with you. Thanks for joining me on such a busy day. Appreciate it.
Thanks very much, Ian. Cheers.
Still to come here on Business Live, we'll be joined next by the Chief Executive of Travelex. Don't go away.
Fly Emirates. Fly better. Fly Emirates. Fly better. Thank you.
Welcome back. Now, Travelex revealed today the extent to which it's benefiting from the continued recovery in international travel. The global travel money services business said it achieved an underlying operating profit of £58.8 million in 2023, up from £23 million in 2022, thanks not only to more travellers, but also due to opening more outlets at locations such as Munich Airport and Paddington Station. Well, here with me now is the Chief Executive of Travelex, Richard Vazach. Richard, good to see you again. A lot of talk about the decline of cash. Obviously, this holds no fears for you.
Cash for travel is still one of the most trusted and the most confided in source of payment. So 70% of consumers, if you ask them, still think of trust as their number one choice if they want to be confident that their payment methods work abroad in the UK. So though you might have seen a decline in domestic cash use, specifically in the pandemic, accelerated that, as soon as you travel, you are nervous, you want confidence and you want security that what you have and that you can spend when you're abroad, cash is the number one choice.
Now, I mentioned there in the introduction you have been opening in new locations. You're also targeting new markets. Where in particular?
So we're very excited about both new countries and new channels. For us, there's a lot of growth in Asia. So specifically Middle East and Southeast Asia are areas that we're actively looking at and in consolidating and growing into new countries. And then new channels. We have a very successful business, specifically in the UK, where the UK has the most diverse source of places where you can get cash. So in the UK, you can get cash from a travel bureau, you can get it from a supermarket, from a bank, you can get it online, you can get it delivered to home. Lots of other countries around the world do not have that richness in supply. So we think that we can take that model and take it into other countries where their consumers don't have so much choice.
Now, while most people know you for the Bureau de Change, you also have a big wholesale business.
Yes.
How's that been trading?
So that's also been growing significantly with the recovery of travel. We're entering new markets. As you said, we're one of the biggest movers of cash around the world, which is fundamentally a logistics business. We move large volumes of cash for banks, for large companies that require huge amounts of cash. And that, again, we're growing into new markets and see lots of strategic opportunity there.
So where are the markets there where you're growing most strongly, that part of it?
So we've recently grown out and started a business in the Middle East. We're seeing a lot of interesting growth in the Middle East. And also we've opened new facilities in Hong Kong to support our Asian business.
You mentioned the Middle East. I mean, obviously, there's a pretty serious situation over there just now. Does that add to your cost? Do you have to build extra security into some of the operations?
We already operate very high level of security and cost. I think if you're referring to the geopolitical issues in the Middle East, that doesn't affect our ways of working. Our ways of working very much focused on the consumer, providing consumers the right propositions and the right levels of security. We continue to look at all these things, but our business isn't impacted by that at all.
And what about transaction sizes when someone goes away? Are transaction sizes picking up? Are they bigger than they used to be pre-pandemic?
So we measure that, and annual ATVs, average transaction values. It depends. Different parts of the world, we see different things. Overall, we're seeing ATVs are rising and growing with the market. In some parts of the world, though, for instance, in the UK, there has been a bit of softening in average transaction values. And part of that, we think, is the cost of living challenges that some people are facing. And clearly, inflation's been quite high as well.
And obviously, a lot of people, most Britons go to the regular locations in Europe. I mean, there's a lot of people are looking for more unusual destinations. Are you doing more business in so-called exotics?
So we are always trying to increase the range of currencies that we offer. We are seeing, Heathrow, for instance, I think is now regarded as the most connected airport in the world. And we do see demands for everything. Our whole focus is to provide customers what they need and react to the demands as people's travel habits change.
How difficult is it for you, though, with countries? I mean, we had a massive devaluation in Nigeria recently. Argentina's obviously got rampant inflation. How difficult is it to manage those sort of currencies?
So we have very strong networks with different providers of wholesale cash. It's a very intimate market where lots of cash is moved around. Clearly, when there are these big dislocations, it does cause more volatility and more movement. But, part of our USP, part of what we do is try to be ahead of that, try to understand it. We have relationships with central banks, and we try to provide our clients and our customers access to the liquidity that they need.
And briefly, Richard, it was reported last September that your owners may be looking to sell the business. Anything you can say on that?
Although I would say we have had some great results. We think 2024, there's some fantastic opportunities for us. Me and my team think we can grow this business significantly. Our shareholders are going to consider their strategic options, but we're focused on the opportunity of growing the business.
OK, Richard, got to leave it there. Thanks for joining me. I'm back at 4:30. See you then. Cheerio.